Good morning, everybody. Welcome to the room. Paul, you didn't cross into the forbidden zone. You just traded into an area that could stop the market, and it did. It happens sometimes, right? Sometimes you say, hey, I'm going to take that trade anyway, and that's okay. That's your right. Good morning, everybody. It's good to see you. Good morning, Andy V, Steve Diego. Nice to have you here. It looks like we're going to talk about termination conditions a lot today, guys. Just for grins. Good morning, Victor. Good to see you. We're going to talk about everything. We're going to talk about what you guys want to talk about. Remember that this is your room. I have the microphone, but guys, I'll talk about any topic you need discussion on. I'll talk about momentum. We'll talk about terminations. If you want to work on management, all you have to do is let me know. This is your room. The goal of the room is to help you read your indicators, to be able to look at your charts and just say, okay, this is what's going on. I have an advantage. I don't have an advantage. I'll take a trade. I won't take a trade. And that's really the goal of the classroom. It's not my interest to tell you when to trade. I don't give trading advice. I'll never tell you to enter a trade. I'll never tell you to exit a trade. I'll never tell you that what you're doing is right or wrong. It just has to be right or wrong for you. You'll be able to decide what's right and wrong through your chart reading, guys. And that's what we really focus on. So every morning, I go to news first. It's important to me to know when there is a red high impact news printing. And guys, at 10 a.m. this morning, the JOLTS job openings come out. What that says to me is that there could be somebody waiting in the wings for whatever that report says. We've all seen Trading Places with Dan Aykroyd and Eddie Murphy, and when the crop report comes out, there's a frenzy on the floor. Guys, that's the same thing that happens here. People wait for the news. When the news comes out, there might be somebody with really deep pockets that just makes it go the other way of your trade. So you can stay away from that crazy by knowing when it prints and choosing to stay out. Video's not working. Let me do a little reboot for you, Pete, see if that helps. Did that get you? Looking good, Billy Ray. Feeling good, Valentine. Victor, you are always there for me on the quotes. There we go. I'm going to roll through what we're going to talk about. Guys, there are two platforms that I discuss in this room. I have people that are on NinjaTrader. NinjaTrader is going to look like this. NinjaTrader uses the dynamic Renko bars. They are a faster moving bar. And then I have people on TradingView. And TradingView uses minute bars, and they take longer to produce. 90%, I would say 95% of what I talk about carries over between the two. There's a few little differences, and we'll talk about those differences. But what we're going to do is we're going to talk about the recipe for a perfect trade. The recipe for a perfect trade, guys, means that you have momentum on your side. For NinjaTrader, it means that you have strong triggers. You have a look that says to you this market is likely to continue in the direction of the trend. The second rule is making sure that there's nothing in the way to stop your good time. And I'm already watching a lot of people trading into these today, sending me these pictures. We're going to talk about them. Because guys, if there's stuff in the way, you don't have room to make money. Sometimes you've got a couple ticks to get back to it. Sometimes you've got 40 ticks to get back to it. The more room you have to trouble, the more profit potential that's going to be there. So we're going to make sure that we have a clear path. You'll be able to see this on both charts. And then finally, you're just going to define an entry area. Finding a way to get into the market with the highest chance of success. So every time we look at a chart in this room, everything that you guys post, we're going to go back to momentum, whether or not there was something in the way, and could you find an entry. When all three come together, you have a high probability trade. And that's what we're going to focus on, NinjaTrader users. We're going to focus on this recipe for a trade because this is a trade that typically wins 70 to 80% of the time. This is a trade that creates an enormous amount of success and confidence from that success. Guys, that's the recipe. That's the best of the best. My job is to teach you to recognize these things so that when one of them goes away, you can say to yourself, this is no longer a high probability. I've put myself in a medium probability scenario. I may have to manage a little more assertively. And then when two of them go away, there's going to be a point in your trading where you finally give in and you say, I would rather do nothing than be busy in the wrong trade. So it's your chart reading that's going to let you control the entry and make the decision on whether or not you want to get in. It's your chart reading that's going to have you managing assertively when advantages are gone. Guys, chart reading is 90% of your day. 90%. The other 10%, and it's probably more like 5%, will be actively trading. So we're going to go through and we're going to talk about these three rules, and we're going to talk about where they're met, guys. It takes two charts on your NinjaTrader. That's your workspace. It's two charts on TradingView. That's your workspace. We're going to talk about NinjaTrader first, and then we'll go to TradingView. I'm going to try not to overlap the two in the basic lessons. NinjaTrader users, you have a large chart, and your large chart is a slow moving chart. It's a very broad stroke of a brush. It shows the overall opinion of the market. It will define direction, it will define momentum, and it will define the areas that can be problematic to you. Your small chart is an entry chart, and inside of one bar on the large chart that defines direction, momentum, and areas, you're going to see pushes up, pushes down. You're going to see a lot of movement and a lot more bars on the smaller, faster chart. We use that small chart to refine entries, to get into the market at the best of the best spot, to reduce risk, to maximize profit potential. We are using these two charts because, my favorite picture ever, they're really a representation of who you're trading with or who you're trading against. So I want you to think of the large chart as the large crowd. These are the men and women with the money, with the influence, and they create trends. They make the market go up or down. These are the people that they stack that market with orders, and they create that momentum that we're looking for. And we want to ride that wave of momentum that they create. And these are the exact same people that are reacting right at those key areas that you're going to see on your large chart long before you ever get to them. And you'll be able to say to yourself, these guys might change direction. These guys might stop things, may fight one another, and you don't have to trade into them. So by following the large chart, very often the large crowd wins. The small chart is the small crowd. These are your fighters. These are the men and women that when everything says up on a large chart, they love to push it down. And when everything says down on a large chart, they love to push it up, guys. And these fighters fail typically 70 to 80% of the time. That's why the entry for the high probability trend trade, buying or selling a pullback in an area inside of triggers, what you're doing is you're literally pinpointing where the small crowd is most likely to fail. And that failure point becomes the entry for the highest probability trend trade. So we're going to use two charts and three rules, guys, and there's a way to get to where you want to be, and it starts with learning two simple looks. Learn momentum. Learn how to recognize strong triggers. We're about to go over it. Learn how to recognize termination conditions. We'll go over that as well. Once you understand those two, once you lay this foundation, you have this groundwork, you have the keys to the kingdom, guys. There's so many opportunities that present themselves once you understand momentum and clear path. So we're going to cover those. You guys can simulate. I see a lot of new names in here. I've got Shadow Picks and Javier 1948. B, I see that you're back. It's great to have you. Guys, post in my room. This classroom is designed to be a discussion. Every trade that you post in this room, we're going to talk about, and we're going to talk about your chart reads. So if you'll do me the favor, tell me how you read your chart in terms of momentum. Did you have strong triggers? Was it weak triggers? Talk about your path, whether it was clear, whether it was only potential, or whether you had a big brick wall in the way, and show me where you enter. Show me where you exit, guys. Every time you post in my room, you get a private session. We talk about the good, we talk about the bad, and if there's anything bad, we talk about how to fix it. It's literally a 2 to 3 minute snippet with my undivided attention, looking at your chart read and seeing if there's a way to read it better, to find a better entry, to have less risk, to find more profit. And guys, this is the first step in becoming a confident trader ASAP. The people that post the most typically get to where they want to be the fastest. The next thing is keep it simple, keep it focused. Use the trading sheet that I give you guys. Whether you are Ninja Trader or whether you are TradingView, I drop a spreadsheet in the room. It's already been dropped. It's at the top of the chat box. The Ninja Trader version has all the basic rules and what they look like outlined. It has over 500 pictures of client trades for you to study. It's got a place for you to build your plan. The TradingView journal has pictures of each trade on the plan in the journal. It has ideas on management, termination conditions. But the one thing that both spreadsheets have is a place to track your trades, guys. So when you post in the room and you get that feedback, drop it in your spreadsheet. Talk about the advantages, and most importantly, put the feedback that you receive in class into your spreadsheet. And what you can do is you can go back and look at what you did yesterday. This was good, this was bad, this worked, this didn't work. I was nervous here, I felt confident here. And if you do that little 2 to 3 minute study each and every morning, what happens is it prepares you for the day, and hopefully it keeps you from trading in determination conditions or trading without momentum, or even better, repeating the things that were bringing you the success. So guys, we're going to keep it simple. Post in the room, keep a spreadsheet, have a checklist, guys. Have a checklist. And that's the second half. I've given you a KISS plan. When we see Ninja Trader in front of us, if I see the rules met for the high probability trend trade, guys, I'll pull the trigger on simulator. I'm not telling you to do it. I'm showing you what it looks like when the rules are met. We're going to have a second trade on there. It's a medium probability trade. Guys, TradingView plan, we're going to talk about where you find your rules met, where entries come from, and then there's a checklist for those as well. The whole goal of the classroom is to get you reading your indicators, to get you seeing these advantages so that you can capitalize. And we're going to start with Ninja Trader, guys. Rule number 1 says strong triggers. Strong triggers is the same on either chart. Both charts will have trigger lines. There are small triggers, 2 solid lines work together, and then you're going to see the bigger triggers. Small and large, they work together in everything you do, guys. Triggers tell the story on pretty much everything that you do. The first thing they tell you is that the odds are favorable for the market to continue up or down. When the background is green, you're in an uptrend. When the small triggers are green, when the large triggers are green, when the background is green, when all the colors match, you can have strong triggers, but it requires space between the small and large. The small triggers are up and above the large triggers. The large triggers are wide. They're angled in the direction of the trend. And when you have this look, it looks like a shark preparing to breach. Guys, this is when the odds are favorable for the market to continue up. And you're going to say to yourself, odds favorable, odds favorable, odds favorable momentum. It's going to push the market. Odds favorable momentum can break key areas. Odds favorable momentum is my first advantage. In a downtrend, when the background is red, small and large must be red. Space between the two, odds are favorable for the market to continue down. So when you've got strength up, when you've got strength down, that's when it's time to go to that second rule to look for a clear path. If you see small triggers inside of the large triggers, you no longer have the advantage. This is called weak triggers. When you have weak triggers, anything could happen up or down. And when you see this look on your chart, it's okay to not go to that second rule. It's okay to not go to the second rule. So let's minimize this real quick. When we look at the chart, this is crude oil. This is the live market. My small triggers are inside of my large triggers, guys. Give me a Y if you see this as weakness. This is when the advantage of momentum has gone away, has left the building. It's no longer in place. The separation between the small and large, this is where the odds are favorable for the market to push. So if you're brand new with me, I want you to go through this very basic concept, and I want you to see the difference between strength and weakness. Strength is always a separation. I want you to think of scissors that are open, and when scissors are open, guys, they can cut and they can get work done. The same is true in a downtrend. When the scissors are open, this is your advantage. As we get up to the top, the scissors close. The smalls work inside. The weakness is there. Rule number 1 is not met. So currently, on crude oil, you do not have the momentum that you need to feel confident the market is just going to continue up. If we go to the S&P, small triggers are below the large triggers, space between the two. Nobody's giving me Ys, but I'm going to tell you This is the look of momentum. This is what it looks like when a market is likely to continue in the direction of the trend. This is the first advantage, 100% personified, and it only takes one bar to see that look. Guys, momentum is amazing, but momentum doesn't trump a clear path. Momentum is the first advantage. A clear path is the second. And when we talk about a clear path, remember, there is a large crowd making decisions, guys, and horizontal lines on a large chart. This is where they're making decisions. It could be Fibonacci resistance, Fibonacci support. It could be yellow one-to-ones. It could be a divergence high. It could be a divergence low. Any horizontal line on a large chart can stop the market. These guys might make a decision, and their decision may be to enter, it may be to exit, it may be to fight one another and take all of your money, guys, and you just don't have to be a part of that fight. So the easiest way to avoid it, and I'm going to show you how to identify a termination condition. Let price reach that area. Guys, we're getting a lot of comments. Let me read this in here. Mark, the bar across the chart with momentum, clear path, and entry. How do you make it and keep it for use? I'll show you how to do that. Just explain to Hunter, if you can clarify. We have a weak top and large triggers a full bar away, so the mid-band may be a problem. Do you mind looking at the ES? So let's do a little live lesson here. So what Jen is saying is hey Mark, price is a full bar away from those triggers. So what Jen's looking at is what we call the gap theory. And the gap theory says when price accelerates a full bar away from these large triggers and reaches any area, whether it is fibs, whether it is a midband, price is more likely to snap back to those triggers. So Jen, this is what defines your midband as a termination condition. If price reaches the midband and the large triggers are a full bar away, you do not have a clear path. But the thing is, Jen, is you've already got two fibs that aren't broken, right? And you've got a weak top, which pretty much takes the 50-50 trade out, and you've got divergence. This midband hasn't even come into play yet. Does that make sense? But that's a good lesson. And if Hunter wants to study it a little further, if you go to the client trades, there are about 30 pictures of what we call the gap theory over here. And the gap theory just says exactly what we talked about. If you hit that midband and the large triggers are a full bar away, it's more likely to close that gap back to the large triggers because there's this awesome phenomenon that price returns to large triggers. Great lesson, Jen. Great lesson. So we'll do this. We'll put a circle on those large triggers and see if they decide to come back. You're welcome, Hunter. So to define a horizontal line as a termination condition, guys, first we're going to let the market get there. You're going to let your price bars reach Fibonacci resistance. You're going to let your price bars reach Fibonacci support. And once they reach, you're going to say, okay, the large crowd's probably making decisions. Where are my triggers? And guys, defining termination conditions all goes back to the triggers, the exact same triggers that gave you the advantage of momentum. So if price reaches an area and four lines, both small, both large, remain below the area, that area is a termination condition. That area could stop the market. That area could create a big reversal. That area could create an untradeable bounce. Absolutely no trades into that area. Price reaches Fibonacci support. Four lines remain above. Absolutely no trades into that area. That's an area that could stop the market. And guys, that is your most basic lesson on termination conditions. Price reaches Fibonacci support. No triggers break through. That's where the reversal came from. Support, support, big bounce, over and over, guys. Look at support. There's a big bounce. The first one came from resistance. Can you guys give me a Y if you see it? You now know where the potential turning points in the market are. You know where the market could stop. You know where the market could reverse. You know what could stop your good time. Now you just have to be willing to not take a trade into it. That's the hardest thing you'll ever do, is sit on your hands when you don't have a clear path. So that's the very basic, guys. And we just saw on the S&P how effective it can be. Does it work on crude oil? Fibonacci support, Fibonacci support, Fibonacci resistance, guys. Resistance, resistance, support, support, all over the place. And where did the market start? Right there at Fibonacci support and a divergence low with no triggers through. So by recognizing and going through that very, very simple recipe, if no triggers break, I choose not to be in that trade. What you've done is you've not traded into an area that could stop the market. Now, areas break. And if they didn't, guys, we'd be stuck in a range forever. So we're going to count triggers. I really need to redo this picture. I've made it too big, but I want it to be legible. And I'm struggling. Here we go. I swear I'm smarter than this. Come down, blow up, come down. There we go. So when price reaches an area, the triggers are going to tell you everything that you need to know. Count how many triggers break through the area, guys. And we're talking right here. So if price reaches the area and none of your trigger lines break through, can you give me a Y if you recognize that? That is a termination condition. The same it was to the left, the same as it was below. Absolutely no trades into the area. You don't have to risk your money. If two trigger lines, the small trigger lines, break above those yellow 1-to-1s, the area has the potential to break. But it's less likely to break with only two triggers through. And because it's only potential, your path is not clear. When three trigger lines get above the area in question, two smalls and one large, now that potential to break is a little better. Now you've got a higher chance of success, but it still isn't a clear path. But when 1, 2, 3, 4 triggers get above the area in question, that area is now broken, guys, and your path will remain clear until you reach the next area. So the same way, 4 triggers below the area means it's a termination condition, or 4 triggers above the area means it's a termination condition right at the area. When 4 triggers break an area, resistance becomes support. Support becomes resistance. Resistance becomes support over and over. And very often, you'll see them come back and retest that resistance. You'll see them come back and test that area of support. So, guys, termination conditions are designed to keep you out of trouble. Termination conditions, the whole idea of counting triggers is designed to keep you from taking trades into areas that could halt forward progress. So momentum gets it going, but momentum isn't enough, guys. You need to have nothing in the way. You need to have that clear path. Once that path is clear, we're going to go define an entry area. Paul, do you got your ears on? I'm going to show you guys a trick. All of you using Snagit, take a picture of a trade equals momentum path and entry. When you take that picture, Paul, it's going to drop it down into your recents. So every time you're looking at something, guys, you can slide over and drop that picture right on top and say, this is what I'm looking for in this trade. Paul, use the call out button and just put a black box over it with the call out if it's not true. And you guys can go back to the idea that every trade needs to be the right trade. Every trade needs to be momentum, path, and an entry as a brand new user. This is your highest chance of success. And then going back to the idea that when you are forced to cover one of those boxes, the likelihood of success does go down. So we have momentum and we have a clear path. We've established that rule numbers 1 and 2 have been met. And now we're going to go through and we're going to define an entry, ladies and gentlemen. We're going to take those large chart advantages. The idea that momentum leads the way, that I need at least 3 triggers through, 4 is preferable, to look for an entry. And guys, rule number 3, The language from rule number 3 becomes the most important language as you learn entries. The language says that I'm going to use a limit order, meaning that I'm literally going to wait for the market to come to me on a smaller, faster chart. And I'm going to buy, because this is an uptrend, a pullback at an area, and then the most important part of this, guys, inside of triggers. And this is your entry language. So I'm going to use a limit order to buy a pullback at an area inside of triggers. So when the large chart has momentum, when the large chart has not reached trouble, and my triggers are above the previous trouble, I'm going to go to the smaller, faster chart. I'm going to look for an entry. The reversal bar on the small chart starts the fight. That's the small crowd showing up, brass knuckles and bats, guys. They're ready to fight every advantage on the large chart. The reversal bar begins the pullback. It's not your entry. The reversal bar gets you to the wrong side of these small triggers, letting you know that we're losing a little bit of momentum, and that's exactly what we need to pull back to the triggers. Your triggers will define where those down bars are most likely to go. Triggers define the retracement zone. Triggers aren't bouncy, guys. Triggers rarely create a ricochet like you're throwing a tennis ball. So we're looking for Fibonacci support, yellow 1-to-1s, or mid bands inside of triggers. And now when I say inside of triggers, somewhere from the very top line of the triggers, larger synthetic, to the very bottom line, this represents where the retracement is most likely to occur. The areas inside are most likely to create a bounce to continue with the large chart advantages. So here I have a mid band closest to the reversal bar. I also have yellow 1-to-1s inside of that trigger zone. So this blue box is what we call the window of opportunity, guys. This is where the market is most likely to bounce and continue with the large chart. I don't know if it's going to be the mid band. I don't know if it's going to be the yellow 1-to-1s. So I'm going to activate my limit order above the highest point of support, closest to the reversal bar, because remember, my large chart is screaming north with absolutely nothing in the way to create a fight or a bounce. I don't want to trip over a couple pennies to save a few dollars, guys. And I'm going to enter this trade at the highest point of support, having waited for the market to come to me. But I understand that if the market continues down past my entry and it's still inside of that zone, still inside of that retracement zone, still above areas of support, guys, my advantage of rule number 3 is still in play. And my advantage of rule number 3 stays in play until I get below those trigger lines, guys. And once you get below trigger lines, you're out of that retracement zone. Once you get below trigger lines, you're no longer using areas that could create a bounce. You're going to learn to ignore those areas, and you're going to say to yourself, this is where the market shouldn't go if it's going to be one of those winners. Once I get below those trigger lines, I don't know if, when, or where that market is going to stop. And this is a good example. Reversal bar begins the pullback. Triggers define the retracement zone. Mid-band defines the bounce point, guys. And once you get in and the market starts down, does everything you would hope it would do, this is one of those instances. This is one of your 20 to 30% where even though you made a little money on the failure, the market's heading up. And once it gets above those trigger lines, guys, it's game over. That's where your advantage is gone. So you're going to use stop placement based on where the market is most likely to continue to understand where the market shouldn't go. One more short example. Reversal bar begins the pullback. Triggers define the retracement. Areas inside of triggers define the bounce point. You have one line where the market is most likely to continue. Your limit order goes below. Your stop will go to the other side of the triggers, guys, the wrong side of the triggers, because this is where it shouldn't go if it's going to be one of those winners. Does that make sense, everybody? New users, you're going to have to go through this a little bit. You're going to have to study it. Here's how. Scroll back on your large chart. When you see momentum and at least the potential to break, circle that tail looking thing that you see. That tail on a large chart is the pullback on a small chart. If your tail, that circle, lines up with support inside of triggers, now you have your pattern. And this pattern is repeatable. This pattern is testable. This pattern is a pattern that repeats itself on every market. And when you have strong triggers and the potential to break, we're looking for a pullback to that area inside of triggers. Even with momentum, with no triggers through support, that area inside of triggers doesn't matter. Once you get to the wrong side, you don't know if, when, or where it's going to bounce. Let's see if we can find another tail with the rules met. Strong triggers. Price has not reached Fibonacci resistance. What does that circle look like? Whew, that's ugly. The first pullback inside of that bar was an area inside of triggers. Gives you an opportunity to make money. And then it just goes sideways and gets ugly, but it never goes where the market shouldn't go. And it actually does go up with momentum. So we're learning a pattern, guys. We're learning a pattern that you can prove wins more than it loses. In order to facilitate your learning, focusing on the best of the best is going to be the easiest thing. The KISS plan that I drop in the room, guys, it's a stepping stone in your learning journey. It is designed to optimize your chances of success. It's going to be your simulation, study, class feedback, and continuous practice. You're going to create your own plan. And guys, let me say this like really loud and deliberately. This is designed to keep you focused on the best of the best. This is the trade that teaches you to read your indicators. This is the trade that builds confidence. This is the trade that sets you up to find the other trades. So you need to know why you're going to enter, and there's a checklist for entry, and there's also a checklist for management, guys, and everything is very, very if-then. Your second trade on the plan is the potential to break with 3 of the 4 triggers through. It's from a strong top, termination that reverses the market, and it can't have divergence to be the best of the best. So this is your roadmap as a brand new user. If we are watching the live markets, ladies and gentlemen, the only way I'll pull the trigger in class is if the rules are met. Hunter, do you see where that price went to? Your mom called that shot. Jen said, Mark, those large triggers are a full bar away. Price is more likely to go back and close that gap. And Jen, it's like you had a crystal ball. You knew exactly what was most likely to happen. It did it damn near to the tick. And now it's working its way back down. Probably kept you out of a lot of losers. Nice job, Miss Jen. Great chart read. Guys, it's just a pattern. Jen recognized it. And it sure enough did it. You don't have to say that in front of the class, Jen. You're going to embarrass your kid. There we go. We're going to get rid of that one. I don't want Hunter to walk in and have you talking about him pooping. All right, guys. So momentum and path. This is your Ninja Trader. This is your first platform. Now we're going to go to TradingView. And I'm going to tell you, TradingView, instead of Renko bars, uses minute bars. All the other indicators, guys, are very much the same. So I'm going to go through, because TradingView is the newer platform for most of you. I'm going to do this. These are your indicators, guys, and I want you to see the familiarities. But Paul, Pablo, who else? Crowbar. Different bar structure. 15-minute bar structure means that it's going to take a little different approach to find the same trade. So first we have trigger lines, smalls and large. Smalls and large. We're going to use these to define momentum. We're going to make sure that we never fight them. You guys are going to see divergence, same as Ninja Trader. You're going to see one-to-one, same as Ninja Trader. Areas that can stop the market. You're going to see mid bands, outer bands, areas that can stop the market. The difference is that you're going to have zones on TradingView until we can get Fibonacci over there. The programmers are working on it. If you're trading up, a zone can be resistance. If you're trading down, a zone can be support. Guys, the whole idea in everything Nexgen, look at that. Everything Nexgen has ever taught has revolved around momentum, path, and entry in some fashion. whether you have a clear path, whether you have momentum, right? Not trading into areas. The biggest difference that you're going to have on TradingView is because the large chart is so slow to move. You're going to look at your 15-minute first, and let me go to the plan. I'll show you how the two charts work. Bum, bum, bum. Your 15-minute chart is your roadmap for key targets, guys. Areas where the large crowd is most likely to make decisions. You're going to use it for key targets, turning points, and termination, guys. And the trigger lines on this chart define the direction and the overall momentum of the market the same way they do on NinjaTrader. The 1 minute is an entry chart. Don't fight the 1 minute triggers. So when we look at our 15-minute chart, the background is red. It says shorts. I'm in a downtrend. That's the first question I asked. What direction are my small triggers going? Guys, my small triggers are going down. The only direction I should be looking for a trade is down with the large chart. Does that make sense, TradingView people? The next thing I'm going to do, and this is important, and this is what I do. When I look at a chart, I draw an imaginary line in my head. You can draw it with an actual drawing tool. Write down those small triggers. Now this is important. This is important. It all says short, right? I'm only looking for rules to be met to go down with the trend, to go down with the triggers. There's three sides of the triggers. Well, there is left of the small triggers. This is the strong side. This is where the shorts are the easiest. This is where I'm looking for momentum trades. This is where I can't wait to go short. There's a transition when price is inside of those triggers. I'm still looking for shorts, but I may have to manage a little more assertively. Once I get to the weak side, and here's where people are getting a little confused. Once I get to the weak side, I'm still looking for short trades, guys. I'm still going with the trend. I'm still going with momentum if there's nothing in the way. But this look is where you tend to get pullbacks, where you're not looking for that momentum trade. This is where trend trades and pullbacks to areas typically happen the most. So everything says short. Is it going to be super strong short? Is it going to be manage a little more assertively short? Is it going to be make sure that that 1 minute chart is in favor of my trade as well short? So a little different. A little different. So we just had a giant spike, but let's go through it. The background is green. Does everybody see it? It's going up. My small triggers are up. I want to go up. I'm to the left side of those small triggers. Where's my cool little arrow? We'll do the big arrow. I'm left of those triggers. I want to go up with it. Now let's look. Once I go through that, is there anything in the way to ruin my good time? Guys, I don't have any areas above me. And here's the cool thing, and one other thing about TradingView is my price is trading above anything that could be deemed as trouble. So it's up, the triggers are up, I'm on the strong side, I'm above trouble, and I actually have strong triggers on my small chart is where? These 1-to-1s right here, are these the ones you're talking about, Crowbar? Or are you talking about these 1-to-1s way off in the distance? Yeah, these are 3 days away, right? So Crowbar, if I found a trade, watch this. If I found a trade, those 1-to-1s would make an outstanding target. I'm not to them yet. They haven't gotten there. There's no reason to believe that they have any bearing on anything going on yet. And it looks like they've even stopped printing. So we may not even get 1-to-1s up there when we get there. But what I've got is a market. Everything says up. Everything is giddying up, right? But the problem is, I don't want to just jump into the market. There's too many fluctuations. So my brain says, okay, areas make things bounce, right? Areas, let's make this smaller because that's huge. What I'm looking for is a pullback to an area. I'm looking for something bouncy. And when this area broke, resistance became support. And when I get back to this area, guys, I'm not going to have strong triggers anymore. My small triggers are probably going to be down against this trade, which means I want to get a close on the correct side of my triggers. So I want to trade in the path of the large chart, but I don't want to arbitrarily jump in. I want it to come back to something solid on a small chart. Hey, good morning, Dreamer. Good morning, Dreamer. So guys, here's a good example. The smalls are up. We're on the strong side of the smalls. The market pulls back to an area, back to a mid-band. And once I get a close above those small triggers, the market is continuing up from the strong side of those small triggers. Do you guys see it? Once I get above those trigger lines, that's when the forward progress starts. And I have room back to the outer band, back to the one-to-ones. I have room to make money because there's nothing in the way on the large chart. Crude oil. When it broke this area of resistance, it behaved as support. What's our current read on crude oil? Smalls are up, large are up, but I'm on the weak side of small triggers, which means this isn't my best look. I'm also trading directly into an area. I'm in a little bit of a patience piece. I can't go short into one-to-ones. I don't want to hope an area breaks. It hasn't broken yet. My job is to wait to get above the area and then pull back. The white bars are what we call breakout bars, Jen. Every time you have a breakout bar and then it's confirmed by a bar in the same direction, you'll see these high volume areas print. So here's a breakout bar up, followed by an up bar, prints a green high volume area. You'll use those high volume areas, Jen, for momentum trades. You guys see how it's all up, but now my small triggers have turned down? We're looking for a pullback to something bouncy. Looking for a pullback to something bouncy. So everything you do, guys, can be related back to momentum, path, where's my entry going to come from? And if you're not sure yet where your entries come from, I've given you a plan. Here's your trading view plan. Once again, the trading view plan is going to define 100% where your entries come from. Your job is to go learn the pattern so you know what it looks like when it's time to take that entry. Your KISS plan defines 100% where your entries come from. Your job is to go back and learn those looks so that when it happens in a live market, you don't hesitate. So when it happens in a live market, you know exactly what the pattern is. So when it happens in a live market, you don't waste time fumbling. You just take the trade with all the advantages. So guys, until we get to something bouncy and a close above the triggers, there's nothing to do in the NASDAQ. Until we get to something bouncy with a close above the triggers, there's nothing to do in the S&P. Until we get above all this trouble, there's just nothing to do in crude oil yet. You guys see it? Does that make sense, TradingView users? So the live read in the S&P. New users, play along with me. Please, please, please. Smalls below the large, space between. Rule number 1 is met. I have momentum down. Does everybody see it? Let's take the picture. And let's put our roadmap on. I've got strong triggers. I'm going to circle it or highlight it. Guys, I've got 2 triggers through 2 fibs, and I've got 2 triggers above. I do not have a clear path. We'll call this weak potential to break based on 2 triggers through. Does that lesson make sense, guys? This is what we call a 50-50 trade. This is the potential to break, but it's not broken yet. Entry area is a pullback to an area inside of triggers, and I want you to just look at it. There's my synthetic triggers, but my large triggers are up. I've got a bunch of areas in here, but without momentum or without a clear path, that's not a great look for an entry. Divergence, ladies and gentlemen, is a loss of momentum. And every time divergence prints against the potential to break, you're losing that first advantage. Two divergences print, you're losing that advantage. And if you go back to your KISS plan, you go back to the optimization, highest chance of success, the biggest killer of that potential to break look is divergence. And it tells you right on the plan, just don't do it. It's not worth it. And we'll see what happens. But that's exactly how I'm going to go through, and I'm going to address every chart that's posted in this room. Did you have momentum? Was there the potential to break or a clear path? Could you define an area inside of triggers? So let me pull this down a little, or we'll just put it at the bottom. Here's your current chart read in crude oil. Did I mention 90% of your day is spent reading indicators? 90% of your day is waiting for advantages. 90% of your day is looking for momentum, which we don't have. Small's inside of the large. It's looking for a clear path, which we absolutely have. All of my triggers are above trouble. I haven't reached anything bad. And then pull back to an area inside of triggers. Ladies and gentlemen, here's my triggers. I don't have an area inside. This is the part I want to ask new users. B, do you see it? There's no fibs, midbands, or yellow 1-to-1s inside of those triggers, which means that I just don't have an entry area. And once I'm at the wrong side of these triggers, guys, I don't know if, when, or where that market's going to continue up. My advantage is gone. And not only do I not have momentum here, there's that look again. I'm even losing momentum on the smaller, faster chart. Guys, you can make the decision based on not having momentum and not being able to find an entry area. You can make a decision to simply not enter a trade. You're in control of the entry. If you do choose to enter, I hope you plan on managing assertively, because you've given up 66% of the good stuff, guys. Doesn't mean that it won't go up, but it means that you don't have an edge. You don't have an advantage, and it's okay to do nothing, guys. It's okay to do nothing when there's nothing to do. Are there any questions about the very basic concepts on NinjaTrader, whether it's momentum, whether it's defining path? Are there any questions about the way to look at a large chart on TradingView, guys? That area has still not broken. At your day job, just listening? No problem, B. If you get really good at this stuff, we'll see what we can do to get you away from your day job, right? Those 1-to-1s printed, ladies and gentlemen. There was no place left to go. There we go. We'll see if we can get set. Guys, if you ever can't hear me, let me know. Very often, if you reboot Discord, it fixes the sound problems for you. I don't know what it is. It would be, wouldn't it be? Guys, everybody wants to be a day trader. Has anyone in the room ever heard of Ronnie Coleman? One of my favorite quotes in the world. So Ronnie Coleman was Mr. Olympia like 8 or 9 times over, guys. Ronnie Coleman, lightweight, baby. Amen, Hunter. Ronnie Coleman had a phrase. And the phrase was, everybody wants to be a bodybuilder. Don't nobody want to lift no damn heavy weights. That was his phrase. And what he's saying is, everybody wants the result. Nobody wants to do the work, guys. Trading is no different than everything else in life. You're going to get out of it what you put into it. So if you put the time in to learn momentum, if you put the time in to learn clear path, if you put the time in to learn entry, guys, you're probably going to get out of the software exactly what you've put into it. Until you put that time in, understand that you're in a learning phase. Understand that you're in a learning phase. Pete, you reposted this one. We're good. And guys, sometimes I miss pictures. Don't ever let me get away with missing pictures. So Pete, we're going through. You have momentum. You have 3 triggers through. Momentum with the potential to break. Pete just jumps in. Pete says, Mark, I have momentum on a large chart. I have the potential to break on a large chart. Once my price bar gets away from that damn decision-making zone, I'm just going to jump in with momentum and hope it goes down. And it doesn't. Goes a couple ticks, and then it pulls back. And it pulls back directly to an area inside of triggers. Pete says when this momentum trade fails, it's just going to become a trend trade with the rules met. There's no reason to exit. And then he takes it off at trouble. And then when he gets to the next little bouncy point, he fulfills the prophecy, and he takes 4 contracts off at $100 each, and that's a $400 trade based on the potential to break. Well, then Pete has odds favorable momentum and a clear path, and he re-enters at the area inside of triggers, the exact same pattern that we talk about every morning. And he gets paid again because that's the goal of trading. And then, guys, he recognizes 3 divergences in the same price range, 3 losses of momentum in the same price range is that small chart giving the heads up that things might be changing on the big slow chart. That's your only small chart termination. So Pete chooses not to take the final trend trade, and it keeps him out of a loser. 3 divergences in the same price range can stop forward progress. Great trading, Pete. And this morning, Pete says, I have momentum, and there's a big, ugly termination condition. And Pete, I almost have a heart attack because Pete's telling you guys, just an observation, even if you have strong triggers, you're at a termination condition. That loss of momentum is showing you a reaction. And Pete says, I love trading into termination conditions. It's hard to stop me from trading into termination conditions. But if there's divergence and a termination condition, that is my cue to not do it. Nice picture, Pete. One of the things I love about this room and this community is that, guys, everybody in this room is focused on success. Everyone in this room is trying to get to where they want to be. And you'll find that a lot of people that have experience are more than willing to pass on a little wisdom. And it's kind of cool when that happens. All right, Paul. Chart says up. Smalls are up, and you're in the transition side of triggers on your entry. Do you see that, Paul? There's your large chart read. You're up, smalls are up, above trouble, and we're in the transition side, which means I don't want to fight these triggers. The market pulls back, but you don't really have an area. But Paul, you get in on the good side of the small triggers. The entry logic is solid here. Good job. The challenge is there's no room to that outer band. And that outer band is pretty much a target. So it gets there and you don't exit, and that's okay. You're just working through reps right now. Great exit at an outer band. And then it pulls back and the smalls are above the large and the momentum is there and you suffer the retracement. And then you exit, and I don't know where on the bar you exited, but we worked through how to get those on there. If you exited by the outer band, outstanding. What a great way to make money. And you can see that the outer band held again, and that's when the market started to push down. Nice job. Good job using the entry logic, Paul. Waiting, not fighting that immediate momentum on the small chart. Very, very solid. And then I went through and I showed you what happened after. Whoops. So there was your exit about right there. I didn't have market flow yet because I just opened. And look how it pulls down. The mid band would be your first spot for more up. But look at your trigger lines. You never get a close above the small triggers at the mid band. Guys, this is how the 1 minute charts are going to keep you out of losers. Rinko, you're buying a mid band. Minute charts demand that close on the other side, and you don't get it until the zone below. But once you get a close above those triggers with everything up, the market does continue back up. And then the triggers roll against you, and now you're on the strong side of down triggers. And guys, that was the beginning of the end. That's where the market started this giant push down. So strong side, transition, weak side, and this is the picture that I wanted to get on this one for you guys. When those small triggers turn against you, longs fall off the table. Does that make sense, everybody? So there's your first pullback and bounce, and then the smalls turn, and it's just cool to not take the downs anymore because look at what those triggers are doing. Go with the immediate strength. Nice job, Paul. Welcome to TradingView. I really do think that the minute bars buy you a lot of patience. And then just one more chart read. The trend is down, red, but the smalls are up again. Don't want to fight those small triggers. I'm on the strong side of the smalls. But guys, do you see the zone? The zone on the large chart, the zone on the small chart? Is there any reason that you have to trade into that zone? Is there any reason that you have to hope that that zone holds or breaks? You don't. It's okay to not trade into them, guys. Termination conditions are the one thing that's going to keep you sitting still longer than anything else. All right, Steve Diego. Steve, are you with me in here? Because we've got a great lesson coming for these charts. I hope so. All right, guys. So the first trade, I'm going to break it down. Odds favorable momentum, clear path. This is the best look you could ever hope for on a large chart. And I want you to see what Steve recognizes. 1 divergence, 2 divergence. He takes the perfect entry like a sniper, and he gets paid. And then when the 3rd divergence prints, Steve, that's your clue to get out of the trade. Maybe could have saved a tick, maybe, but break even is great. Make some money, and even on a trade that fails, Steve's able to make $100. And guys, this is one of the reasons great entries create manageable trades. So if you're one of my new ones, Dreamer and B, and who else is new in here, guys? Let me know who you are. Learn this entry. 20 days. Chariot. Give me 20 days of learning how to snipe these entries because even the trades that fail offer opportunity with a very solid plan. Great job, Steve. All right, now we're going to go into Lessonville, population U. Steve's chart, once again, strong triggers and clear path, right? Does everybody see it? Strong triggers and a clear path. Now, Steve, this is where we set you right a little bit. Do you see that blue fib? Guys, I'm not going to tell you what to do with your software. I'm not going to tell you what you should or should not do. But I'm going to share something with you real quick. Your large chart on NinjaTrader has Fibonacci levels from 3 time frames. You're going to see these skinny lines that don't extend to the right. These come from your smaller entry chart, guys. You're going to see big fat lines that don't extend all the way to the right. These come from a 21-3 and even higher time frame. The lines that print all the way to the right, these are native to your large chart. These are the 13-2 fibs. Now, each fib is equally as important as the other. Each divergence low is equally as important as a fib, is equally as important as a 1-to-1, is equally as important as a divergence high. And I want you to see what I mean. Right here, the 21 and a 1-to-1 stop the market. Here, a 1-to-1 stop the market. Here, a divergence low stop the market. Here, your 5-1 fib stopped the market. Here, your 13-2 fib stopped the market. Guys, every line on your large chart is just as important as the other. Some of you will alter your time, your workspaces. Steve, you took your synthetics off of your large chart. That 5-1 fib belonged on the small chart. So you are trading into a termination condition. Does that make sense, Steve? Guys, if you don't want to put it on your large chart, that's cool. If you see it on your small chart, give it a little bit of respect. But we're going to go back to, and I drew the picture. So you can take it off. It doesn't mean it doesn't exist. But Steve, you also don't have any areas inside of triggers. So not only are you trading into a termination, you also can't define where the market is most likely to bounce because there's not an area inside of triggers. Let's look. Mid-band is above the triggers. So your stop isn't where the market shouldn't go. Your entry is where the market shouldn't go. Your stop was 4 to 5 ticks, 3 ticks. Nope. 7 ticks above an area outside of triggers. Steve, does that make sense? So the very basic recipe, but guys, I like it because by not having the tick data, your computer may run a little more efficiently, right? But if you see that fib on the small chart, be willing to respect it, especially if you don't have areas inside of triggers. Here, let me drop it in the room for you, Diego, so that you can just download it. There you go, bud. Awesome management on the first trade. Got a little outside of the rules on the second trade. You're welcome. All right, here we go. Termination reverses the market. There was that wrong side of the triggers up here. No worries. So we're up here. Strong triggers. Mid-band's not a termination because the large triggers are not a full bar away. Steve says with all of this momentum, and I'm above trouble, and all of this momentum, I'm just going to get in with the momentum and see if I can't get to that fib. And sure enough, you do. Nice trade. And then Steve, once again, just to reiterate and not beat a dead horse, big old fib at 2806, and that's exactly where your 50-50 failed from a weak bottom, was right at that key Fibonacci area that under normal circumstances would have been on a large chart. Only 2 triggers through, divergence, and that's what kills it. Great trade, though, on the way up. Momentum and nothing in the way. I told you guys, you will find a way. Momentum, nothing in the way. Steve says, I'm going long. I'm getting paid. Early entry. Traded into the one-to-ones, but with all that momentum, large chart, nothing in the way. Path is clear. Steve says, what a great opportunity to make a couple $100. I'll get out of trouble. Nicely done, Steve. Great trading today. And an awesome lesson. An awesome lesson about how the fibs end up on your large chart and how they do play a role in everything. So even if you don't want to use that tick data to take up resources, guys, it's important that you recognize it. Good stuff. For you new users, this is what we do all day long. We look at what you did. So Paul, smalls up, trend up, strong side of the smalls, everything says up. You get the pull back, right back to the HVA, right back to the outer band. And Paul, do you see how this bar right here, that first close on the correct side of the triggers, gives you room to trouble? And this one at 67.15, it only gives you 3 ticks before you get to that brick wall. Does that make sense, Paul? Sure. So on TradingView, guys, if you don't want to annotate on Snagit, see that T? That's your text. There's all your annotations tools. You can do notes, price notes, pins, tables, callouts, comments, price labels, flags, all of that good stuff. Yeah, and it's okay, Steve. One of the things that you can do is just when you see that line, just mentally see it over here, right? I see a big red line at 28, so when I get to 28 here, I just believe that that line is there. But you're right, NinjaTrader has a lot of crashes, guys. One of the reasons I love TradingView. So Paul, you gave a tick up. That's okay. There just wasn't a lot of room. Just not a lot of room. And guys, sometimes weak triggers push up. Sometimes areas on the wrong side of triggers create a bounce. Hardly ever crash now. That's awesome. Crashing is a colossal pain in the butt. It really is. Another reason I'm a big fan of TradingView. I love my Renko bars. I really do. Momentum, no. Clear path, yes, Victor. Clear path, absolutely. Nothing in the way. Everything is green. Potential for divergence is just potential. Victor, go to your core. Momentum, no. Clear path, yes. Area inside of triggers, no. 2 out of 3, right? Guys, do not let potential divergence scare you out of anything. It is a 3-bar endeavor, Victor. You won't know whether that divergence is true until the market's trading all the way down here at 25. Don't even let it hit your radar. Guys, the only time potential divergence should hit your radar is if it's a reason to not enter the trade on the small chart. Good read, Victor. Don't overthink it, guys. Don't overthink it. Let it be simple. Let it be basic. Let it be 3 things to get you into that market. Miss Jen, loss of momentum. Look what happens. No areas inside, and sure enough, it pushes lower. Because I only have one of my 3, you can avoid a loss. How do you work your stop if you're already where the market shouldn't go? Nice picture, Miss Jen. All right. I clicked on it and I forgot to see who it was. Caleb. What's going on, Caleb? I love this. Check it out. Odds favorable momentum. Nothing in the way. Potential to break. Caleb, you say, you know what? With all that momentum on 2 charts, I'm going to jump in. Guys, jump the fudge in is what we call that. You were watching the one-to-ones because they could create a bounce, and when they didn't, Caleb, you held it to the Fibonacci area. This, my friend, is a beautiful trade. That's $110 in maybe a minute. Do that 5 times a day, Caleb. You'll never work another day in your life. Great job. Andy V says, I spotted this one just before bed. Let's see what you say. Momentum, yes. Resistance at 66.65. So, Andy, big ugly support line, right? Big brick wall. Right there. So let's just do this real quick. Momentum is yes, 100%. I love language. I think language pays dividend. Did you have a clear path? Not at all. Can we do a tiebreaker, Andy, to see if you want to take this trade? Did you have a pullback to an area inside of triggers? You could define an entry area. Did you have room from that mid-band to get back to trouble? 66, you had about $120 worth of profit. And then Andy, this is the one that I really want you to see. Pete put a picture in earlier. Do you see how there's no divergence on the pullback to the mid-band? And even more importantly, do you see how there's strong triggers on the pullback to the mid-band? Andy, you didn't sacrifice any of that first advantage on the small chart, and that's what makes these work a little bit. Caleb, everybody's going to manage different. Everybody's going to have a different idea. Um, and each trade, Caleb, is going to be managed different. So let's go to this real quick. Let's go to a management lesson. Can we do a live chart read and then go to a management lesson? Because I don't want you guys to miss out. It's still weak triggers, ladies and gentlemen. It's still no areas inside. It's a tough look. It's a tough look. Smalls are going up. Hey, Hunter, check it out. We reached a mid band. Large triggers are below the reversal bar marker. Ladies and gentlemen, this mid band is a termination, 100%. That's the lesson we talked about earlier, guys. Even though price went above, triggers are still a full bar away. And as long as those triggers are a full bar away, that market is more likely to close the gap to those triggers. And it looks like it's on its way down. We'll see what happens. Even more likely to happen when that push up doesn't come from a termination condition. All right, trading view. Whoa, those one-to-ones held like a mother scratcher, didn't they? Look at that. And none of you traded into them, and none of you lost money into it. And now I've got flat, ugly, do-nothing triggers. I've got no room below me. I've got no room above me. The market's going sideways. Guys, go make a sandwich. The S&P. Smalls are down. Trend is down. Strong side of the smalls. There was your pullback to the mid-band. There was your close below the small triggers. And the market is still going down to trouble. Crude oil, they're trying to break above, right? And then they pulled back to the zone. And then they closed above the triggers. If you were going to take a long trade, you should already be in it. But in a transition, right in a zone, that's going to be less likely to work, but it's pretty low risk. If you got in right around 49, you've got maybe 5 or 6 ticks of risk on this trade. Maybe. Maybe. All right, let's do a management lesson. So Caleb, and everybody in the room, I'm gonna do the management lesson in a couple of different parts. Management is where fortunes are made, guys. Management is where great trades are lost as well. So I'm gonna take a little snippet out of the KISS plan first. So there's 2 things that you need to know before you sit down to trade, and you're not on simulator. The first thing is, why will I enter a trade? Well, guys, I enter a trade because my rules are met, because I can look at a checklist and the market is showing me exactly what the checklist says. This is my look. And I have that checklist because I can prove that that look wins more than it loses. I can prove that that high probability trend trade wins more than it loses. I can prove that that trading view, momentum trade, wins more than it loses. That's why I enter. And here's the cool thing about entry, is if you prove that it wins more than it loses, and you say, okay, I took 50 of these trades, right? And I won 70 to 80% of these trades, then I know without question, every 10 trades I take, I'm going to lose 2 to 3 of them, right? What a weird way to think about reading the market. I know that every 10 trades I take, I'm going to lose 2 to 3. And what it does is it takes a lot of the sting out of losses. But I also know if I'm trading the pattern and following my rules, every 10 trades, I'm going to win 7 to 8. And it's hard to not build a career with those sorts of odds. So that's why we enter a trade. But there's a lot of different trades, right? So know the advantages that get you into a trade. Have that checklist. Why will I exit my trade, guys? I will exit my trade either because it hits my profit target or the advantages that I had when I entered the trade have gone away. So for example, if I enter a high probability trend trade, when will I exit my trade? Well, I'll exit my trade if the market goes to the wrong side of the triggers, if I go where the market shouldn't go. I'll exit my trade if three divergences print in the same price range against my trade. I'll exit my trade if I reach a termination condition on my large chart. Guys, all of those are advantages going away. What a great reason to exit. The challenge is that there's more than one type of trade. So I encourage you guys to name your trade. I'll drop this document in the room for you. So naming the trade means that I know the exact rules to get me into the trade, right? So if I'm a brand new user and I'm taking a high probability trend trade, I'm going to use the rules in the KISS plan to exit as I learn to read my indicators. I'm going to keep it very mechanical, and we'll go over those. When I grow outside of the KISS plan, I'm going to begin to recognize a few patterns where my advantages are gone. Those become awesome exit conditions. If I'm in one of those medium probability trades, one of those potential to break trades, guys, divergence becomes an exit condition, not three divergences. So different trade, different advantages gone. If I'm in a momentum trade, a close on the wrong side of the triggers, and if I don't take that one, divergence. So Caleb, in your particular trade, your advantage was momentum. So what's a great exit condition? Either hitting a termination condition, which is an awesome place to exit, or losing momentum, which means a close on the wrong side of the triggers. So does that make sense, Caleb? So for this particular trade, you could say, I'll exit at Fibonacci resistance because I'm up over $100, and what a kick-ass place to exit because I know it could stop the market. Caleb, maybe you're trading two contracts, right? And you say, I'll take half off right at that area of resistance because that's my payday. And then Caleb, what you can say is if I get a close on the wrong side of the triggers, if I get a reversal bar that closes below my small triggers going up, my advantage is gone, I'll exit. Well, there's two ways to look at that, Caleb. One, you knew what could stop the market. Do you really want to give $130 back, right? But let's say the path is clear. And Caleb, wouldn't you rather take two ticks than risk a trend trade failing and putting your stop where the market shouldn't go? So when you talk about what kind of trade you're in, you know what the advantages were. If I'm in an HVA trade, there's reasons to exit. So each trade is going to have a different approach, guys. And when you talk about letting them run, Caleb, let's go see if we can find a good example. If I were in a short trade, okay, so Caleb, here's your trade. This is a great example. Caleb, if you entered the market right there, and you're like, giddy up, here we go, life is good, and you see that big blue fib, you might say, I'm going to get paid here, right? There's my first profit target. But as long as price is left of these small triggers, this market's going down. So Caleb, for that second contract, you may hold for that close on the other side. You make an extra 30 or 40 bucks on the trade. Does that make sense, Caleb? You know that trouble is there. You get paid at it, but you force the market to take you out of the second trade. And then what you'll find is that when the market is screaming with the potential to break, your failed momentum trade, Caleb, very often can turn into a trend trade. So you have to ask yourself, would I rather get paid, be assured the money, or am I willing to put my stop where the market shouldn't go if I suffer the retracement? Because if this medium probability trade fails, you give it all back on the second contract. And the idea of trading is to get paid. So depending on the type of trade you're in, that'll determine what it looks like to have your advantages going away. Great question. And then guys, until you get to the point where you can read your charts quickly, if you're taking high probability trend trades in the KISS plan, it gives you management for the high probability trend trade. And the management plan, guys, is based on 2 contracts. Learning how to get in at the right spot is the most important part of this equation. But then it gets you trusting stop placement. And guys, it gets you focused on getting paid. And that's really, once again, the goal of trading. So let me show you what the KISS plan management looks like. And this is in the spreadsheet that I gave you guys. It's nothing more than if-then, and it's very, very mechanical. If my entry is 2 ticks below the resistance inside of triggers, that's my entry rules. There's my checklist met. Then my initial stop is 4 to 5 ticks beyond the triggers. This is where the market should not go. And guys, that's got to be your phrase for management. If I get into a momentum trade, where should the market not go? It should not go to the other side of those triggers. In a trend trade, the market should not go 4 to 5 ticks above those triggers, which is why entering on the wrong side of triggers is so damn difficult, because you're already where the market shouldn't go. You're going to know your risk before you ever enter a trade, guys, and this is one of the wonderful things that the accuracy does for you. You don't have to rely on your guts to manage your trades. If I enter here, then my stop is here. And guys, I have $150 of risk per contract. In the KISS plan, your targets are predefined, $100 and $200. It has nothing to do with Fibonacci. It has everything to do with a $100 target getting you paid. So if I enter here, I'm either going to get stopped out, and guys, it's every 2 to 3 out of every 10, or I'm going to get a reversal bar in the direction of my trade. And if I get a reversal bar in the direction of my trade, I'm going to redefine where the market should not go. And my new stop is 2 ticks above that reversal bar. And I can redefine it because now the market is going down. And it's not just going down. It's going down with large sharp momentum. It's going down with large sharp clear path. It's going down from the area most likely to make it go down. This bar is confirming that my trade is doing everything that I want it to do. And because it is, I'm going to reduce my risk 2 ticks above the reversal bar. It's very mechanical. I now have $30 of risk per contract as opposed to $150. It doesn't guarantee a winner, but it guarantees a much, much, much smaller loser. So now, once again, I'm absolutely powerless. It's either going to hit my stop or it's going to go to my first target. Guys, that $100 target is put in place because even if these trades fail, with all of those advantages, it's difficult to not hit $100. And once it hits it, that $100 goes into your account. And your sweaty palms dry up, and the butterflies leave your stomach, and your pulse relaxes a little bit. And you're going to move your stop to break even. Notice that when I say move your stop to break even, I do not say where the market should not go, because you are still below an area inside of triggers with all of the advantages on the large chart. This break-even stop, guys, is designed to get you to trust the large chart, to believe that you would have never entered this trade anyway without momentum and a clear path. And with this look on a large chart, it's more likely to push down than it is to come up and hit your stop. And if it hits your second target, this is a $300 trade because your second target was only $200 away from your entry. This is the most mechanical approach to management, guys. It's based on the easiest entry that we teach, the highest probability, and it's focused on getting paid. Now, one other thing I'm going to share with you is a lot of people in the room, and you know who you are. I need bigger trades. I need home runs. I got to knock it out of the park, or I don't even want to be a part of this game. Guys, $300 a day, if that's the best you do, you're adding $75,000 to your trading account. $200 a day is 50 grand. Ask yourself right now in the most honest, forthcoming voice you can have, am I currently making $50,000 a year in my trading? If you're not, guys, learn how to make it consistently, then grow from it. Make $200 a day, guys, mirror it on 10 accounts. You're making $1,000. It's $250,000 a year. The idea with trading is to learn how to get paid. The idea with trading is to be willing Caleb, going back to your picture. Dang it, where did your picture go? To be willing, oh, because it was such a great exit, to be willing to get paid at things that could stop the market, right? How many of you have traded directly into a line and given it all back, hoping that line breaks? How many of you have taken a trade directly into a line and just lost money, hoping that line breaks? Guys, Nexgen gives you the ability, these indicators give you the ability to know precisely where the market may bounce, to know precisely whether it's broken or has the potential to break, and to know precisely where to enter at an area inside of triggers. And here's the deal. The rules weren't met here and the market still went up. And you guys are going to say to yourself, damn it, I have to start breaking rules. Because that money should have been my money. Guys, it's just not your money. That might have been your money with the rules met, right? And if you scroll back, that was probably your money with the rules met. But your rules are designed to keep you out of problems, guys. Your rules are designed to give you a higher chance of success. I still have weakness. I still don't have areas inside of triggers. Sometimes it's just not mine. They went back to the large triggers, right? They missed them by a tick. And guys, they're still trying to push down. If you thought you were taking a long trade, you're a little despondent right now. If you took that long trade up, Paul, it made the outer band. Close on the correct side of the triggers, right at the zone with everything up. And sure enough, it went right up to freaking trouble. What a great way to make money. Trading with the large chart. Good stuff. Caleb, did that help a little bit with management? That was probably a lot longer than you wanted. Strong bottom, triggers rolled. This is one of the things you're going to do too, guys, is you're going to say odds favorable momentum, but you're not. You're not. What you're doing, when you point to this advantage, but the market is here, you're telling that girl at the bar that you used to bench 300 pounds, never mind the fact that you struggle under 125 now. Does that make sense? You're bragging about shit that didn't happen anymore. It's gone. It's in the rearview mirror. You can't do it. You can't run a 4.540 anymore, guys. You run a 10.12 or whatever. I don't know. So we've got weak triggers, which is not momentum. We've got small triggers inside of the large, which is not momentum. Jump the fudge in, hoping for nothing to push the market, and it doesn't, and it pulls all the way back to areas outside of the triggers, and Pete jumps back in, right? Well, I still have a clear path, and then a second divergence prints, and it goes back to the area outside of triggers, and wow, dodge a bullet again, and you get out for probably just enough to cover commissions. Now, Pete, I don't know what the hair on your head looks like, but this is a great way to lose it. Taking momentum trades without momentums doesn't make sense. Believing you have momentum when you don't, it's tough. It's gray. Me too. It hasn't turned loose yet. But do you see how we're forfeiting advantages? And Pete, let me say this, because for the classroom, for the new users, giving up that much rarely equates to success. When you sit in the chair Pete sits in, you're going to make different decisions based on your experience, based on your chart reading. This works out for Pete. If you're brand new, you don't have the seat time that Pete has. You're not going to be able to manage it as effectively as Pete managed that. That's kind of the lesson there. So when you see people in the room doing stuff, don't do what they do. Follow your plan. Victor, weak triggers, clear path. Victor, I need you to stop putting no on the clear path. Well, 3 divergences. Wrong side. Chart's going sideways. You just don't have to do it. You just don't have to do it. Now it decides to go. Just not your money, right? 3 divergences. No indication that it was going to go. Guys, the market hates you. Don't forget that. No, it doesn't. All right, chart reading, Paul. 15 up. I agree. Against the termination, small triggers barely through. Does the three triggers through hold true in TV? Great question, Paul. So one of the challenges. No, you're good. But Victor, there's nothing in the way, right? Do you see it? There's nothing in the way. Your path is clear. You're good. Now over here, you could put 3 divergences, no more longs, right? But on your large chart read, I just want to make sure you understand that it is very much a clear path. It just doesn't have the momentum to push it. All right, so Paul, 15-minute bar. 15-minute bar. So what happens is we are gonna look at where price is in relation. And if we have a good look and everything is up and we're above the trouble, price is above the trouble, you could take that shot. Does that make sense, Paul? And sure enough, when you come back right here, you've got a good looking entry. Everything says up. And what you're saying is that with price having deviated, I'm hoping that it goes up because I can define an entry, because the trend is up. You'll pay attention to the triggers, but you've also got to pay attention to price on these, because see how price goes below and back up and below and back up and below and back up? I would never take a short trade from above those one-to-ones if the rules were met. NASDAQ was a great example yesterday. I was chart reading with somebody yesterday, and I'll show you exactly what I mean. Where was it? So it was about right here. Everything said down, right? Strong triggers, everything said down. You could trade back to the one-to-ones, but they never broke. And then the other side of it, Paul, is if you tried to take an entry, so price gets above, if you try to take your entry from below those pink one-to-ones, it never went. And once it broke above and triggers were up and everything was going up, that was the long trade. So you couldn't go short because you just didn't have room back, and you couldn't go long because you can't trade directly into it. But once you clear it and there's room, it helps out. So you're going to look at the relationship of price to those areas. And then let me just give you an example. And we'll do it on the large chart here. And regardless of what happened on the small chart, I'm going to use the one-to-ones. So initially, I'm trading to the one-to-ones. Do you see them? So I'm looking for longs, Paul. I see where they're at. That's my problem spot. And even, come on up. Let me get Snagit up real quick. Come on, Snagit. There we go. Even here, Paul, once price starts to go above, I'm looking for long trades. If my entry point is below that trouble, Paul, I'll sit on my hands. If my entry point is below trouble, I'm not going to trade directly into it. So I'll use price's relationship to the areas a lot to help me out. Small chart zones, when everything says up on the large chart, small chart zones just give me a good looking target. The outer band gives me a good looking target. So currently, everything says up. I'm above trouble. I haven't reached trouble. My only option is long. I don't want to trade directly into a divergence high. This is where my rules say smalls are inside. I don't have a momentum trade. I'm going to look for a pullback to something solid where I can find a close on the correct side of the triggers. Does that make sense, Paul? And everybody else in the room. It all says up. I even have strong triggers, but I'm in the transition side of these triggers. I don't have momentum over here. It's directly into a divergence high. This is where I want to see the market come back and give me room to trade back to anything that could be problematic. And if I get below 47 right here, see the zone, the bottom of the zone, 67.47 is the bottom of the zone right here. Paul, once I get below that, it's game over, brother. Now I'm on the wrong side of everything. I have to wait to get back above it. So the hope is that this loss of momentum on the 1 minute gets me back to an HVA, to a mid-band, to a zone. By the time I get here, my triggers are going to be strong. So I have to wait for a close on the correct side of the smalls. Guys, that's calling your shots. 100%. Just calling your shots. This is what I see. This is where my rules say I have an opportunity. S&P. Everything says down, strong side of the triggers, nothing in the way, right? I'm not just going to jump in, but once I get a close on the other side of the triggers, I've got room to go down. Some of you might have taken a momentum style trade. Strong triggers, pull back to the zone, pull back to the HVA. I'm going to tell you right now, if you are in this room and you took this trade and you lost this trade, congratulations, you took an awesome trade. Strong triggers, strong side, nothing in the way, pull back to an HVA in a zone. I will sell that thing all day long. When it fails, I have to get a close on the other side of the small triggers. And as it comes down, at this point, I'm probably already break even. I probably took partial profits. And if I still have a stop that's not break even, it has to be on the other side of that zone where the market should not go. But so far, it hasn't even come close to hitting it. So no matter what chart you're doing, oh, check it out. It did it again, guys. Price reached the mid band, even the fib printed. Large triggers a full bar away, and it closed the gap. It's doing it again. It's just hard when you can't find advantages. Guys, NinjaTrader is not better than TradingView. TradingView is not better than NinjaTrader, but you have to think about them differently. They're different charts, different reads, different rules, different setups. Ollie, 3 triggers broke through. Lower divergence. It closed the gap to the triggers. Everything says down. Potential to break. 1 divergence, you choose to take it. You waited for price to react, so you catch it on the way down. You get paid at the possible trouble. And then when the next divergence prints, you exit the market, break even. Great management, Ollie. It's only the potential to break. You recognize that potential's going away, and you get out without losing anything, and you make money. Guys, I can't stress how great entries create manageable trades and an opportunity to make some money where there didn't appear to be any. Nice trade. Strong trending market, 30 bars in the same direction, heading into the term. No divergence. Hit your entry on the wrong side of the triggers but didn't fill. Had it filled you, you would have been in. So, no momentum. Right at the triggers. It's a good read, Ollie. It's a good read. Or was that Pete? That was Pete. Everything is up. 30 plus bars. The only challenge is you're on the wrong side of the triggers. That's the bad part about it. So when you pick a stop, you've got to pick a stop. It's an arbitrary number, right? Because if the midband doesn't hold, how far is it going to go down? Maybe I might protect behind those one-to-ones. It's a good look, Pete. I like having the one-to-ones to protect me the same way I had them right here. And then it just gets wonky and then it heads up. Nicely done. Ollie, you had a fib. Enough room before termination condition. No odds favorable momentum. Pulls back to an area inside of triggers. Got in a little late. So you've got a 21 fib there. You've got a little information we don't. And great job getting paid right at trouble. No reason to lose if it comes back. Great job, Ollie. Pete, he got your trade, brother. He had a fib, you didn't, though. He had a fib. Yeah, you had your one-to-one right there, so stop behind the one-to-one. I like it. That's smart, right? If it breaks through two zones, I don't want the trade anymore. But if it doesn't, Pete was all in. I dig it. There is an HVA there. We'll find out, says Paul. So let's go see what's happening in TradingView on that. That was crude oil, wasn't it? We made it back to the area. We made it back to the zone. We got to close on the correct side of the triggers. Right? I missed my entry. 67.51 fit the rules. We called our shot, didn't we? We said this is exactly what I need to see, exactly where I need to see it to go with the large chart. So where's your first sign of trouble? If you entered this market with the close above, that divergence high at 62 represents the first trouble. If you were in at 51, 61 represents $100 on this trade. Does that make sense, Paul? And all of my TradingView people. We called the shot. We drew a box. We said exactly what we needed to see. The market came back exactly to that spot, 100%, and did everything that we needed it to do. Does that make sense, ladies and gentlemen? Welcome to Nexgen. Call your freaking shots. That's what we do. How did I know that was my shot? Here comes the amazing part. You ready? The amazing mark. It used to floor me when my brother would do this. How did I know that's what I needed to see? Well, because my checklist for TradingView, where's my trend trade? 15 minute, not trading directly into a zone. 1 minute, not trading directly into three divergences or a zone. Buyers sell a close on the correct side of small triggers at the midband. 100%. 100%. You kept fumbling with the entry icon, missed it due to language barrier. No worries, you'll get there. So what I do, Paul, is, so let's say I'm going to take a close above these triggers, and it looks like they're not going, because we're on the weak side. You have to manage. But let's say I'm going to take a close on the correct side. Whoops. If I go to more settings, guys, and go to scales and lines, I can literally get a countdown on my minute bar. So I have 25 seconds to know whether or not it's going to close above. I will literally keep my finger on the buy button. I've got 15 seconds, I've got 14 seconds, 13 seconds, 12, 11. I can wait, right? And 5, 4, 3, 2, 1. Did not close above. I choose not to take this trade. Does that make sense? If you were already in it, your stop's still in the right spot. You may still be in this trade based on the large chart. So now I've got 48 seconds to think about getting a push up above those small triggers. But because this was your trade, could we just enter the trade and accept a lot of risk from the original stop? That seems like a lot of risk, right? 100 bucks a contract? That's really not. Everything says up. I'm above the zones. Guys, that is giving away 70 bucks per contract. That's giving away $280. But the trade rules are the same. Large chart says look for the long. Large chart says you're above trouble. Small chart said close on the correct side of triggers. They retraced, right? You could take half off at the divergence high, right? You could take it off at the outer band. You could reduce contracts and you could right click and put sell to right at divergence and take half of it off there and then just modify that. Well, that'll change once the first two come off. Stops in place. Entry is crazy late, but the rules are there. And another thing, guys, if you click the setting again and go to more settings, go to trading, move your positions in alignment to the center, and they won't be in the way of your trade. Great entries create manageable trades. If you got in at the right spot, guys, you probably already made a little bit of money. But that's all we're doing. Getting in 7 ticks late didn't do anything but increase risk. Getting in 7 ticks late didn't do anything but reduce the distance to trouble. But my large chart hasn't changed, has it? I am on the weak side of the triggers, but I am above all the zones. This lets me know I may need to manage, right? So it's hard to take a trade from the wrong side of things. It's hard to take a trade seven ticks deep. And it still may go up, but I'm not going to stay in a trade with a bad fill. I'll just say it's not my money. But that's the rules, and that was your entry right there. Let's do the big honking arrow. That's the one that fit the rules. We'll come back to it. We'll see what it does. All right, NASDAQ. What's the NASDAQ doing? Let's get back to where the market's trading. My goodness. There we go. Smalls below the large is odds favorable momentum. Transition side of the smalls. And what is my small chart doing? I'm waiting for agreement. If I'm going to take a short trade, my momentum trade came from 65.25, but doesn't give me any room into all these zones. A trend trade might give me room to trade back. There's nothing in the way until 521.25 down here, but my 1 minute chart has all sorts of trouble. Do you guys see it? And trouble held, and it held, and it held. Would it be okay to let it get below trouble before you look for a trade? I feel like it would, but that's a decision you have to make. It made it, and now we pump the brakes. And then that was your pullback. HVA failed, closed below, and it made it to targets. Guys, it's all a matter of rinse and repeat. Same thing over. And look at that. This time the midband didn't hold. And it pushed down directly to support with every trigger above. And guys, bunch of malarkey. So I'm going to take a few minutes. I'm going to go stretch my legs, guys. When I come back, I think we made it through all the pictures posted. Post a picture. Ask a question. If you're brand new with me, take a picture and tell me what you see, right? So even if you're not taking trades yet because I just don't even know what trade to take, look at where price is trading and answer these questions whether you know the answer or not. Do I have momentum? And tell me what you see, and we'll go back to a lesson if we need it. Do I have a clear path? Tell me what you see. And if both are no, scream real loud. I shouldn't look for an entry with no large chart advantages. Drop it in the room. We'll talk about your reads. We'll see what you say. I say I don't have momentum yet, nor do I have a clear path. If I'm going to look for a short trade, I have to get below trouble. That's what my rules say. I'll leave this one up, guys. I'll be back in just a few minutes. Stretch your legs. Back in 5. It's because I wasn't talking, Morgan. All right, guys, let's go through it. Do I have strong triggers? Absolutely. Do I have a clear path yet, or is it the potential to break? What do you guys think? It's 3 triggers through. No divergence. Fits the plan. If I get a pullback to the area inside of triggers, I can take a shot for continuation down. If price is above that lower area, guys, when it comes up, very often that area may not be the one that's going to hold. You had a momentum style trade off the 1-to-1. If the momentum style trade fails, the most likely option is the trend trade. If we enter the trend trade at the area inside of triggers, just below resistance, 2 ticks, my stop will go 4 to 5 ticks. I choose 5 above these large triggers. So the momentum trade is on the brink of failing. And it may work, and we may not get a trend trade. If they come up, it can get me at that area. Guys, that's rules met. That's on the KISS plan. That's everything that we look for. That's just a big, ugly fight without momentum. And dagnabbit, we'll see what happens. Maybe they come back for us. Maybe they don't. I don't know. Let's see who's next. Pablo. Nothing in the way. Strong triggers. Stop loss placed above the prior zone. Closed on the correct side of the triggers. And you get in at 50.75. No, that's got to be your exit. In at 53.25, which is right there. You know where the trouble is, but with all that momentum, it doesn't phase you. Great stop placement. Nice job. Pablo. Letting the large chart lead the way. Finding a way. The only question I have, Pablo, did you say to yourself, this could create a bounce? Did you say to yourself, this could create a bounce? That's it. That is like the only thing that I could say, is I just want to make sure you knew that these could create a bounce. But great stop placement. And man, when I break below this one, I'm even behind that one. Beautiful job, Pablo. Great trade. $500 in 4 minutes. There might be something to this. Awesome, awesome job. All right, guys, we're just waiting. We're hoping, right? Can we hope that they get us? Can we hope that they come back? The momentum trade's still working. We've lost momentum. Hopefully that's enough. Hopefully being on this side of the small triggers is enough to get us back to an entry. How many of you said, oh no, it's going without me, I'll get in right here? That's a pretty common entry. Oh no, it's going without me, I better get in at the very bottom of the move. Get up there, S&P. Get up there, S&P. All right, so if we get our entry, come on, give it, give it, give it. Are you kidding me? I'm teaching a class here, S&P. I'm not going to fudge it. I'm going to force it to fill. If it doesn't fill, well then I'm going to feel good about calling my spot. It tapped it like 3 times. Jen, I remember. The oh no, it's going without me entry is a very real entry, guys. Well, they did get us. Just didn't fill us. That happens sometimes. That's a bummer. Some of you will say, you know what? It tapped, didn't fill. I'll get in and trade my plan, right? And I'll use it. If it comes back, I'll add on. If it doesn't, we'll just take the trend trade from a little bit lower. That's your right. Stop where the market shouldn't go. All the way down here is kind of tough. If it taps it, doesn't fill it a couple times, getting in a tick or two low. It's what my brother calls just paying extra for the entry, right? But the expectation is the same. The expectation is the same with momentum and path. Now we have the real entry. Put the stop where the market shouldn't go. Odds favorable momentum, 3 triggers, no divergence. If we get a reversal bar, risk will be reduced behind the reversal bar. If we don't get the reversal bar, it means they're going up and getting us, guys. I ended up in a 4 lot on this one. Great entries, create manageable trades. Look how low that is from the trouble spot. So we're going to kiss plan it. If we don't get stopped out, then we'll wait for a reversal bar. If we get a reversal bar, we'll reduce risk, 2 ticks behind. If it keeps going up, guys, they're just going to get us. And that's okay. That's what simulator's for. This lesson is it's okay to not jump in if it looks like it's going without you. And that's my fault. I was trying to give you guys a little bit of excitement and a little bit of action and get an entry so you could actually watch the market move, so we could go through that KISS plan. Now we're just going to let it play out. My large chart still says down. My large chart still says potential to break. My large chart still says room to targets. I like the look on my large chart, guys. My small chart pulled right back to the areas inside of triggers. My small chart didn't go where the market shouldn't go. So just waiting for a small chart reversal bar, hopefully. And if we get that small chart reversal bar, well, our stop's already a couple ticks above it. So there will be nothing to do until we hit the first target. Had we taken the 22 entry, guys, our first target would have been right here. That's the correct target. But because we fudged our entry, I fudged our entry, my first $100 target is all the way down here. I still have momentum, still have the potential to break. There's your reversal bar. Now I'm on the good side of the small triggers. So from 21, it should be 19 is $100 there. I'm not sure what strategy I have in. 19 represents $100. There we go. There's our $100 target. We'll go break even. And then 1775 represents the $200 target. And I feel like we're going to get it. We may not. And as long as this is the potential to break, ladies and gentlemen, divergence is an exit condition. Because I see the potential, I can put my stop 2 ticks above the reversal bar marker, and that'll give me reaction time. Caleb, it's not how many ticks above or below resistance, it's where the market shouldn't go. So when I entered this trade and took that horrible picture, my trigger lines define the retracement zone. My areas inside of trigger lines define where it's most likely to bounce. My stop goes 5 ticks above those trigger lines because that's where my advantage is gone. So it has nothing to do with being above or below the areas. It's above or below the trigger lines because the trigger lines define the retracement zone. The areas within the triggers define where the market is most likely to bounce. Will you just come tap it? Come on. And if I had not entered at 20 and had gotten in at the correct at 21.75, This was a much easier trade to get filled and make money on. That's my bad, guys. Feel free to chastise me if you like. And the KISS plan says, until I have a clear path, divergence is an exit condition, which means that if this potential for divergence becomes true, I'll know about it about 2.5 bars up. My stop placement is 2 ticks above the reversal bar marker in case divergence prints quickly. So worst case scenario on this trade, I mean, we've already made $300 because it was a 4 lot. Worst case scenario is we come out of this trade with about a $350 winner. Best case scenario is we're about a $500 winner on a 4 lot. Come on, you're 1 tick away. Does anyone have any questions on why we did what we did? Why did we enter 2 ticks below resistance inside of triggers? Why should we not chase trades? Because we're better than that. Why do we trust the large chart? Because it's more likely to go down than up. And guys, when you get a little bit further along, you might put that last target all the way down at the fib, but that's a nice $437.50. And it's 100% rules-based. And if I circle the top of that move, it just happens to be the tail on that large chart with momentum and 3 triggers through. And now, Caleb, let's go back to the lesson about this market's not going to go back up until I get a close on the other side of these triggers. So if I were thinking of holding my final contract, that's one way I could use it. Is say I'll force them to get to the wrong side of my momentum indicator for an exit. Or I've already been paid on 3. Let's see if we can hold for Fibonacci support. Management plans grow as you grow. But this was the super mechanical. My bad entry made this a $437.50 trade. The correct entry, it's an easy $300. You're out of the trade. And guys, look, now you've got momentum and a clear path. And if you got a pullback to an area inside of triggers, doesn't that fit the recipe for a high probability trend trade? Do you guys see it? Just because I've already made my money doesn't mean there isn't another trade. I love it when the live market plays along. Momentum and path. B, did you see it? Is it starting to click on day 2 a little bit? Chariot. And Caleb, did that make sense? Where the market shouldn't go? Guys, I've been saying the same thing in this room for 6 years. Nexgen has been teaching the same idea, the same methodology. When everything is strong and there's nothing in the way, it used to be pull back to the mid-band and take a close on the correct side of the triggers because Nexgen used to teach on minute charts back in the day. But because of Rinko, it turned into sell the area right at the triggers. Hunter, did you catch it? Are you watching the S&P? Did any of my S&P traders catch this? Is anybody going to be able to show me? I hope so. And we're there again, right? Still have momentum, still have a clear path, still have areas inside of the triggers. Guys, your window of opportunity, should you get a fill, is that big. Your risk is virtually nothing. 5 or 6 ticks, maybe. So we'll come back and see what happened. And they made it. We're not the only people that know about Fibonacci, guys. The large crowd knows where these areas are, and that's where they're trying to get. From fib to fib. And now we're going to wait for the reaction. Are they going to bounce? Is it going to break? I don't know. We'll find out in a moment. How did your crude oil trend trade work out? There was your entry. Looks like they stopped you out. See how it got below the zone? Became problematic? That's your big clue. And then when it gets back above, All the momentum. I love a little snap back to one-to-ones to finish the move, right? Good stuff. So 16 on the second. Every 4 ticks, Hunter, is $50. So on your second contract to get a $200 trade, it's going to be 16 ticks instead of 12. So you'll want to change that number. Still an awesome trade. Guys, 1 week with the software. 1 week with the software. Believing that it's just a pattern. Love it. S&P says down. S&P says strong triggers. S&P says strong side of the triggers. This is where, ladies and gentlemen, and Paul, this is a good lesson live. I don't really want to take an entry above this zone. I want to look for an entry on the good side, on the clear side. So if price pulls back up to here, I'm going to be a little leery because look what it did here. It pushed below and finished above. That's a good lesson. That's a good in-the-moment lesson. Now we have full-blown strong trending market, railroad track triggers. If that large trigger gets above the fib, we have a clear path in a strong trending market. My job is going to be to buy a pullback at an area inside of triggers. But I don't have a clear path just yet. I've got to wait and see if that sets up. There is my pullback to resistance inside of triggers with momentum and a clear path. If I get an entry, and I should have been 2 ticks below, but I was only 1. If I get an entry, then my stop belongs 2075, 2175. That's 5 ticks. That's where the market shouldn't go. Some of you, as you grow with the software, will adjust your plan and say, you know what? It's worth $50 to me to get to the other side of Fibonacci resistance with every trigger below it. Does that make sense? The KISS plan initially is going to put you right here, guys. You can make a decision to get to the other side of something that could stop the market. Doesn't look like they got us, though, and we're not chasing this one. Awesome stuff. How we feeling today? How we doing today? Not a lot of pictures being posted, which is okay. One of the things that you can do is you can go take pictures, you can study, you can wait, you can play video poker. You can do anything but break your rules. Or you can break your rules. That's up to you. I'm going to keep this loaded because my rules are met. We'll go 2 ticks below. If they come and get us, outstanding. If they do not, I'm not worried about it. Guys, look at this though. Every indicator, down, 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 down. Everything says down. Everything pushing down. Everything's pushing up, but I don't have a clear path yet. HVA line held. It was below the zones. Right at trouble. I don't even have to go through all the trigger nonsense. Right at trouble. Need to be below it. Need to find a way to get below that spot. What do you guys want to talk about? Well, they didn't get us. I guess we don't get that trade. Guess we'll have to be happy with $400 on the first trade. I'm going to show you guys something cool. If we had taken this trade from the correct spot on a 4 lot, that's a $600 trade. That's a $600 trade live in front of you, following a plan. Guys, you could shut it down and go play golf. $600 a day, guys, that's like, oh my gosh, 150 grand a year, I think, give or take, for taxes and commissions. From one trade, waiting for the perfect trade. Now, what happens if you lost $500 trading into termination conditions before that? Well, you're up $100 and you're trying to finish the day. You're trying to make something happen. Avoidable losses kill accounts. Poor management kills accounts. Great entries save the day, guys. Notice how they're just stuck right at a fib. That's buyers and sellers winding up. One of them is going to unload. I don't know which one it's going to be. Everything's pointing up. But until those large triggers get above, I'm going to have trouble trusting it, especially at the tail end of a move. And guys, if you were 2 ticks below, you just made more money. I bet Hunter caught that one. 2 ticks below, yellow 1-to-1s inside of triggers. You're annotating it now. Miss Jen, don't let your boy out-trade you. Dreamer, how are we doing? I know it's day one. It's a lot to take in, isn't it? B, still maybe a little overwhelming, but now the language is starting to make sense, I hope. Shadow Picks, I sure hope you can hear me now. John Novak's in the room. Pretty cool when the CEO shows up. He's probably auditing my class looking for a reason to fire me. Oh, doom and gloom. Not really, guys. Positive mental attitude. It's what it's all about. When you know that's more likely to win, guys, it's easy to put your stop in the right spot. When you know it's more likely to win, it's easy to ignore little fluctuations. Do the study. Take the time. Put the work in. Let's do a little recap for you guys that are still new to us here in Nexgen. 5 days a week, guys, we talk about 3 things, 2 charts, whether it is TradingView or NinjaTrader. We talk about momentum, we talk about path, we talk about entry. Momentum and path are the core. When you understand the core, when you can identify momentum, when you get the path, you'll begin to see more and more and more and more and more. But until you can, we teach you a high probability trend trade entry. B, it is very overwhelming. I totally get that. So I encourage you guys, focus on 3 rules. There used to be a section in the website that said for your first 30 days and beyond, the only thing you should look for is that high probability trend trade. Don't look for the medium probability trades. Don't look for the HVA, for the momentum, for the jump in. Don't look for the counter trend trades. Just keep it simple and flowy and do it. Here's your indicators, exactly what you're looking at on the charts. I'm going to drop this in the room as well. The full lesson on momentum, the full lesson on termination conditions, and the full lesson on entry, guys. Make this your life's mission in the very beginning, because this is the trade B that you're looking for. You're looking for a pullback to areas inside of triggers, and you're looking to take profits, and who cares what the market does next? Because when you're making money in small increments, those small increments add up. Base hits pay bills. If you're uncomfortable with the language, let me go to the Nexgen page real quick. John Novak has gone to great lengths to try to make everything accessible. So first, start with the indicators. Guys, this is a great, great, great review. So if you're like, man, I'm just struggling with the language in the room, what's he talking about when he says that? This is a great way. And then be it also below it, it goes through what everything is and what you're looking at. It talks about the areas that you're going to see. It even talks about how to execute trades. And then it breaks down the individual rules, momentum, terminations, and entries. So you can slow the pace a little bit, do a little independent study, right? And then if you're on TradingView, my friends, it's the same thing. Here's your video. Where'd your video go? Come on, John. There it is. There's your indicator descriptions. And there's the trading plan broken down for you, video form. So guys, just because it's a little zippy in the room as a brand new user, slow it down and go at your pace and go through. And here's the wonderful thing that you guys can do. I'm scrolling through and I'm looking at the indicators and I'm thinking, man, what the hell is this? Grab a picture of it, bring it to the room, drop it in the room, and say, Mark, can we talk about this? Just like that. And the answer is yes. The answer is absolutely yes. The answer is, let's talk about what you're looking at but don't understand, and let's get you clarity. And once the clarity comes from this on momentum, well, then you're ready to start going to termination conditions. And once you're good on that, then it's time to go find some entry opportunities. And once you're there, we could start talking about management. So it's a marathon and everything is sequential. It's like that book in the Bible where they say begets 500 times. Bob begets Sue, and Sue begets Bob, and Bob begets Joe, and Joe begets Steve, and there's this huge lineage, right? And trading's a lot like that. Once I understand momentum, I'm going to start talking about path. And once I understand path, I'm going to focus on entries, right? It's numbers. Thanks, Victor. So your education can be very sequential. Your education can be very, if I have momentum, then I'll decide on my path. And if my path is good, then and only then will I go look for entry. And if my entry is great, well, then I'll use the KISS plan management to try to pull a little something out of the market so I can learn how to be successful in a minimalist fashion until I become the level of chart reader that my study is going to take me to, and I begin to see more opportunity. And guys, remember when I said, when you take this trade, with a little bit of experience, you'll probably put your last target at blue Fibonacci support. And look where the market went. And can you imagine entering at 2175 and getting out at 1375 and making 8 points at $400 per contract instead of just $437 for the whole trade? That's where you're headed once you catch this entry. That's where you're headed once you catch this entry. Learn how to get paid, and then, Caleb, you're going to learn to let them run based on the type of trade you're in. And it's just rinse and repeat. Rinse and repeat. When I started, I fought John Novak on everything he told me to do that would bring me success. I didn't learn the rules because it felt like work, right? I didn't post my pictures in the room because I didn't want to be wrong in front of a live audience. And I definitely didn't keep it simple. I believe that every tick on that chart belonged to me. And I didn't know what looks I would commit to. And all he told me, and John, if you're in the room, you probably remember this conversation. He said, Mark, I'm going to give you the rules. True story. He said, Mark, I'm going to give you the rules for one trade. I want you to learn how to identify these things. And I want you to go back and I want you to take 10 pictures long, 10 pictures short, commit them to memory, and then just practice them and keep posting them in the room until you have it right. And I fought it tooth and nail, and I didn't do it. And I was separated from about $5,000 of my hard-earned money in about 21 trades over the course of 2 hours. That's how long it took for me to blow out my account. And that's when I started following the path. All right, let's see what you did, Hunter. 3 triggers through, all the momentum in the world, no divergence, Perfect entry. Easy money. Easy money. And I'm going to say it again. 5 days in, guys. 5 days in. And Hunter, you even robbed yourself of the extra 50 bucks. 5 days into the software, keeping it simple, following a plan. The market doesn't care about your opinion, but man, it sure does repeat itself. Did you get nervous up here, Hunter? Most people do. Very. Did you say to yourself, I'm still in the retracement zone? All of my rules are still met. I haven't lost my advantage. It's my job to hold this trade. That's hard. Just waited and hope. That's all you can do once you take the perfect entry. And look what it ended up doing. I love it. I'm a big fan of patterns, guys, and the market repeats itself over and over. Remember when I said I'm not even going to look for long if that large trigger, that last line doesn't get through? It didn't. You can see it better over here. And sure enough, avoidable losses. If you thought the market owed you something because you didn't get paid here, you just paid dearly for it. All right, my large chart read. Everything says down. Oh, there's another trade. Thanks, Jen. You need to stop. Stop momming them. Jeez. You never stop momming. Ever. There it is. Odds favorable. Clear path. You sold the high tick, Hunter? Really? You got into a short position at the high freaking tick? Made money? Made money. That's what mums do. No, I know. My oldest is in town this weekend. My wife, you would think he was 2 years old. It's adorable watching her do it. All right, let's do some math real quick. So, Hunter, I just want to make sure. No trades in here, right, where you couldn't get your rules met? 90% of your day doing nothing. Waiting. 10% of your day is following rules. So I want you guys to see this. Those of you that are non-believers on the outside. The first trade was worth $250 because we had to fix a couple things. The second trade was an easy $300. So the question that I always present, was the wait worth it? Was the wait worth it? To make over $500 over the course of 10 minutes for sitting still for how many hours did you have to sit still? My goodness. Guys, this is what separates successful traders from the people who struggle, is the understanding that your trade is coming. Your trade is coming. You can't force it. You can't make it. You can't wish it. You can't will it. But when it comes, don't you dare freaking miss it, because that's what's going to produce. Nicely done. Ah, Miss Linda. You're helping us with this trade was so helpful. You'll go back and practice it again tonight. Odds favorable momentum. Clear path. Mark, well, your chart looks a little different than mine, Miss Linda. You know, you still had the fib right at the area, so right around 2175. Are you on NinjaTrader 7 still? Is that right? Yours looks a little different than mine. Your areas got to the wrong side of triggers, which is a little tough. But at the time of the reversal bar, That fib was inside, that mid band was inside. So yeah, you're looking at right around 22. You get in, it bounces, you get paid at treble, and as everything goes down, it hits your stop, making money. Linda, Ninja Trader 7 is going to offer a different look than Ninja Trader 8, which means that your fibs are going to be a little bit different. Your synthetics and everything are going to be a little bit different. But the the reality is, with odds favorable momentum and a clear path, life is good. And you took the second trade, didn't you? It looks like another entry. And then you got stopped out up above. Good stuff. Great job. I'm glad hearing it live helps, guys. I try to get the market to let us follow rules. I really do. But I can't pull the trigger on a trade if my rules aren't met. So if I don't have momentum and I can't define an area inside of triggers, 2 out of 3 is gone, guys. I'm doing you a disservice if I take this trade hoping it works because I'm not following a plan. Weak triggers right at a fib. No clear path, no momentum. I'm doing you a disservice if I take this trade hoping that it wins. Because guys, if I take the wrong trades and they win, what message does that send you? When I spend so much time each and every day saying there's a plan that optimizes your chances of success and then I jump into this room and I choose not to follow it, that doesn't send a good message. But we're doing all right following the plan, guys. We're doing all right following the plan. Remember that. Your plan is your plan for a reason. Your rules are your rules for a reason. There's no short trades to be had, guys. Every trigger line you have is above this Fibonacci area. Until they get back below, you have to believe this market is more likely to go up than down. Does that make sense? Some of you are saying, oh, but look, it got red. There's a mid band. With 4 triggers above the fib, you have to believe that market is more likely to go up than down, which keeps you from hoping that the market miraculously goes down. It's just rules. All right, I'm going to take like 2 minutes, guys. When I come back, we're going to finish strong. If you have a picture, post it. If you have a question, post it. If you have a need, express it. Let's take care of it. I'll see you in like 3 minutes. I just had to hydrate and answer a question. Hasn't gone down yet. Guys, if it's really going to go down, the triggers on the large chart will roll. If it's really going to go down, those triggers are going to roll. If those triggers don't roll, guess what? It's probably not going down. You guys that sent me friend requests, I have just accepted them. But I just now saw them. Shadow Pix, did you get with tech to take care of your problem? One of the things about the room, guys, is I don't always see my messages in the moment. So it's always better to post in the room. And if you have a technical problem, please go through tech. Please go through tech. So we're in a holding pattern, right? I don't have momentum up, but I do have a clear path up. All of my triggers are above a fib. I can't find a short trade to take. Nothing says go down. Nothing says go up yet. I just have to pause. Once you get to the wrong side of triggers, you don't know if, when, or where the market is going to stop. But with all the triggers below resistance, the market was more likely to go down. Just didn't have rules met. What do you think? Are they trying to get to 67.93? I don't know. Does everybody see where the market is trading right now? Back above the fib? Despite the reversal bar, it's no longer a strong trending market. Can you guys give me a why? And this is what I really want you to see. And it took me a long time to learn this. Four triggers above, market is more likely to go up than down. That's it. That's all you have to say. You can admit to yourself, I have no idea what it's going to do. But if you have to use that phrase, more likely to go up than down, you have to believe that a short trade doesn't really make sense, right? Because what you're saying is, I'm willing to enter a trade despite what the market is most likely to do. When you say it like that, does it make sense to go short? When your triggers are strong down and you say the market is more likely to go down, does it make sense to take a long trade? That's chart reading. You can look at your indicators and you can say, because of trigger location versus this fib, the market's more likely to go down, which means that trying to go long at a mid band at the small triggers logically doesn't make sense. And that's really all chart reading is. Because I have weak triggers, anything could happen up or down. Because I don't have areas inside of triggers, I can't define an entry. I've lost my edge. Might be a better way instead of hoping. And it's frustrating. I haven't taken a trade in an hour. I haven't been in a trade in 45 minutes. I've been here all day long and not a darn thing has happened. And then magically, it just shows up. Good stuff. Guys, I'm getting a lot of friend requests. I love it. I will accept every one of them. And I got one that says, man, I got some questionable. I'm looking at it right now. Just a heads up for everyone in the room. And nice to meet you, Shannon. Just a heads up. Nobody at Nexgen ever will reach out to you and solicit for crypto. We will never offer to trade from you. And if I'm being completely honest, we'll never start the conversation. So if you send me an instant message, guys, I will always reply. And if that reply is attached to the message that you sent, 100% it is from me. If I ever ask you for crypto, if I send you a message going, hey, I just wanted to check out, what do they say? I wanted to check in on my new clients and see how your trading journey is going. I wanted to let you know that we will trade for you and just send me 5,000 crypto and we'll make it happen. Guys, delete it. Report it. It is 100% scam. Um, and there's so many different scammers out there. And the only reason that they keep scamming is because people keep sending them money. So I'm going to go to the announcements here. And on the 7th, Cam reminded everybody that we won't do it. And on the 26th of June, another reminder, and another reminder, and another reminder, and another reminder, and another reminder. So anytime you see that happen, guys, it's not us. I'm going to tell you very honestly, if I want your money for software, I'm going to pick up the phone and I'm going to call you and I'm going to say, hey, guess what? We've gone through everything. You clearly see that the software does exactly as advertised. And once you learn how to use it, you'll find that it's very effective. And the market went down with all the triggers below. Do you guys see it? How did I know it was going to go down? Everything was green. I didn't. But it was more likely to go down. And sure enough, down it goes. And the market is more likely to go up. And sure enough, we're above all the fibs. It's just a chart read. So thank you for that message. You know who you are that sent it. Thank you for sending that message. And absolutely, it is not me. It is not John Novak. We don't want to ever solicit you outside, guys. We've been in business for 30 years, and none of us are shy about saying you need to pull out a credit card and make this stuff yours. We all believe in it that wholeheartedly. But what I do want you to do is I want you to ask a lot of questions. And if you are new in my room and you're learning these things and you're trying to get these concepts down, I want you to send me a message. And I want you to say, hey, Mark, can we take 20, 30 minutes? Can we talk about these basic concepts? I'm evaluating the software and I really don't have what I need to do it yet. I don't feel like I understand it well enough to go back test it. Can you help? And guys, the answer is always yes. But the easiest way to test, just a little heads up for you guys, go back and circle those tails on a large chart. Disabling friends request for the security of the account. I'll ask John Novak. I'll go and I will I'll check with John Novak and see if that's something they're doing that I don't know about. But anytime anyone from Nexgen starts a conversation with you, it's probably not Nexgen. Probably not Nexgen. I'll double check and make sure though, but that sounds sketchy. What do you guys think? I knew where the market may react. I know it says that it may go above. Thank goodness I didn't go short. Let it be simple. All right, we have 15 minutes. I am going to